Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about the Elliott Wave theory. We'll define the concept and then make it a strategy that you can apply in your trading. So the Elliott Wave theory is a form of technical analysis that looks for recurrent long-term price patterns related to persistent changes in investor sentiment and psychology. So these are just big words for nothing. But before we jump into the war video, I have an announcement to make. On the 13th and 14th of December, we are going to have our last bootcamp for this year. So the students who are going to participate in that particular bootcamp are also going to participate in the $250 challenge that I will hold starting January 2022. So that's a move to grow a small account, and I myself will open as well a $250 account which will grow together. So this bootcamp will be going for $85, and to join, please use the link in the description box below to talk with me. On that note, let's actually jump into our today's content. So the Elliott Wave theory is actually a form of institutional trading concept. So let's describe what it is. So we have a model that we follow whenever we are trying to use the Elliott Wave theory. So in this case, the model states that the market movement with the investor psychology will always create 5 waves in a full cycle. So in this case, we are saying we'll have an impulsive rise, which we'll call the first wave, another drop, which is a corrective move of the market, creating what we call wave 2, then an impulsive rise again, which we refer to as wave 3, and another corrective move, which is wave 4, and the last impulsive rise, which is wave 5. So we'll all in all, we'll have 5 waves to complete what we call an Elliott Wave cycle. So after completing to wave 5, we'll have an ultimate correctional move where we'll have A, B, and we'll have C at the end of that correction and restart this particular cycle again. So if we are to tune to the preceding time frame of observation, for instance, let's say we have this as our monthly time frame and have these 5 waves on the monthly time frame, we expect to have these similar waves on the weekly time frame, since the weekly is the standard preceding time frame to the monthly time frame. Therefore, on the weekly time frame, we'll have wave 1, but within this wave 1, we'll have separated waves that follows the Elliott Wave model. In this case, we'll have 1, 2, 3, 4, and 5. And at 5, we'll have an ultimate correctional move of that particular weekly time frame, which will lead us to 2 of the monthly time frame. We restart again the cycle where we'll have 1, 2, 3, 4, 5, and from 5 we'll have a correctional move where we'll have A, B, and C. Then we restart again 1, 2, 3 up to 5, and from there we'll now have an ultimate correctional move which will give us this move on the higher time frame. Therefore, this model applies to each and every time frame. If you are to look at the 1 minute time frame or the 5 minute time frame, you will see these particular waves. So the waves are defined as impulsive moves up or down, separated to each other with a small consolidation or a price pullback. In this case, we are saying this wave is separated from wave 2, 3 with this pullback, which is actually a correctional wave 2. So you should always look for separation of these as pullbacks or as consolidations. So we might have wave 2, the correctional wave, as a consolidation in between these 2 impulsive rises. So if you are to look at H1 time frame always know that the preceding time frame, which is the standard M15 time frame, we have this kind of move. If we are to look at the M15, expect to have the M5 as this one, and if we are on the M5, you would expect the M1 to be like this. It all depends on how you trade the market, if you are a swing trader, an intraday trader, or you are a position trader. So let's now jump over the charts to see how it goes with these waves. So this is euro against dollar. The first thing we should always do is try to find the pattern on the higher time frame. In this case, I am going to start on the daily time frame to see where we are in the Elliott Wave cycle. In this case, on the daily time frame, this is what we have. So on the daily time frame, we are going to first try and mark the waves that we see so that we may be able to know where we are and where we are possibly going to go next. In this case, we can see that this was the starting point or the peak of the market where we had an ultimate reversal on the daily time frame. Then from that point, we had the first impulsive drop, which was our first wave. Therefore, we may label this as wave 1 on that particular daily time frame. Therefore, we have wave 1, wave 2, and for a complete Elliott Wave cycle, we say we only have 5 waves. So in this case, this is now becomes our wave 3, and then wave 4, then from wave 4 we go to wave 5. In this case, we had wave 5. Then from our model, after wave 5, what do we expect? We expect A, B, and C in our model. So to check if these waves are fully satisfied within the Elliott Wave model, we'll now need to go on the preceding time frame, which is the H4 time frame. So the standard preceding time frame of the daily is the H4 time frame. So we'll now go on the H4 time frame. This now is the H4 time frame, and we are going to mark the waves within that H4 time frame to see. This is now a matter of checking if the waves are completed within the preceding time frame, so that we will not deem a complete Elliott Wave cycle whilst we do not have enough of the preceding time frame. So in the preceding time frame, which is the H4 time frame, I'm now going to mark out the waves. This was the highest point, and from that highest point we had the first impulsive drop, which becomes our wave number 1. I'm going to change the color to red. We had the first wave, wave 2, right? Then we had wave 3. We can see the impulsive drops. From this point, we can see we had 1, 2, right? And then the third one. So from this point, we had wave 4, So this was our fourth, and this one on the daily time frame will coincide with 5 on the preceding time frame. So this becomes 5. Therefore, the first daily wave was complete. Let's now check the second daily wave to see if it has completed its waves on the preceding time frame. So here we can see that we had the first wave from this highest part, first impulsive drop, then second wave, third wave, the fourth wave, and then the fifth will always coincide with the last wave on the daily time frame. So we had enough waves within this second daily wave, or in the second wave of the daily time frame. So here we continue to check if we have enough. We can see that we had consolidation. There was no net drop or net move. So from that consolidation, we had wave 1, right? Then wave 2, then wave 3, then 4, then wave 5, as I said earlier, will always coincide with the last one on the higher time frame. So wave 5 on the daily time frame is this one, and then wave 5 on the H4 time frame will become this one. Therefore, in this case, we would say the daily Elliott wave cycle is complete, right? So going back on the daily time frame to see how it looks like, this is how it will look like. So in this case, what are we now saying? What we are saying is we are now anticipating to see A, B, C move to fully complete our Elliott wave cycle and probably have our restart of the Elliott wave cycle like this. Therefore, in our case, what we are anticipating to see is an A move on A's wave on the daily cycle, B, and then C. So what does this tell us on the smaller time frame, or where will we use this information? So this information is going to apply in the case that right now, if we go on the H1 time frame, we are in an upward trend creating an A wave. Then after that upward trend, we are definitely going to create a B wave, and lastly we have a C wave. From the C point, that is where we are going to have an absolute drop of this kind. So in the next video, we are going to talk about where do you expect to see the A, B, and C wave, as well as where to expect the first waves within the cycle of the Elliott wave. So that's is going to come in the next video. In this case, if we are to go back with theory, yes, we would see that we had 1, 2, 3, 4, and then we had 5 in this case. So if we are to go to the weekly time frame, we would see where we are in the Elliott wave cycle, and knowing where we are in the Elliott wave cycle will give us a higher chance of knowing where the market is going to take us next. So the only thing that you now need to know is to know where exactly these turning points of the or the end of the correctional waves will occur. These ends of the correctional waves will occur. That is what we'll talk about in the next video. On that note, we come to the end of this video. Don't forget to check out our Telegram channel. The link is right in the description below. We share educational content, free signals, as well as analysis and our announcements that will be upcoming from time to time. Thank you so much for watching this video. Have a blessed day.